What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down how the overall market may end up moving over the next 18 months given the current macroeconomic data and why it's basically suggesting that we could see two big crashes this year before we do get a very nice recovery very soon and well into like 2024. Now, please note that I'm not necessarily promising that any of this will happen because unexpected events could happen. I'm saying that because unexpected wars could break out, unexpected pandemics, unexpected inflationary, pieces of data. I don't know exactly what's going to happen, but the current data is suggesting this. I just wanted to break this down for you guys to prepare you guys for some things that are coming to the markets. But before I do that, before I get into any details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, whether it's $1 or $100, it's up to you. You're guaranteed up to 12 free stocks, each valued at up to $3,000. And the best part is, any could be a free Tesla share. It's a limited time offer. The offer ends in just 3 days. Make sure you check it out before they run out. With that out of the way, let's get on with the video. So anyways, when it comes to the market right now, we are seeing a bit of a pullback. I did mention to you guys that the market could see a bit of a bounce next week. It is possible before we likely see more downside, in my opinion. But the real question is, are we going to hold this like 370 to 380 zone, or are we going to continue crashing lower? And that's why I do have two possibilities just for the very start of this cycle. And that is the yellow one right here suggesting that we might actually bounce, and the blue one suggesting that we might actually crash. And this is based off CPI. Right now, we had inflation come out. Three inflationary measures. CPI was pretty hot, PPI was very hot, and now the Fed's PCE was very hot, which just came out yesterday. So, right now, inflation is still very hot. That is not good for the markets. But the next big inflationary report that's coming out is going to be CPI on March 14th, followed by PPI on March 15th. Those are all going to be coming out 1 week before the FOMC meeting on March 22nd. If CPI is very hot again, this is going to spook the markets. The markets are going to likely correct even more and start pricing in a much more hawkish Fed. There's going to be lots of panic, and the market's going to take a big hit because a 50 basis point hike will become a lot more likely. But if the CPI report is very cool, then the market might not actually crash as much, and the market could actually hold some levels, right? So these are basically the two possibilities. Cool CPI could cause the market to just hold these levels and then continue from there, or a very hot CPI is going to suggest that the market's going to end up coming down. Now, I believe it's more likely that CPI is going to be hot. And I'm saying that because the current reports were pretty hot. They were not actually that close to expectations, especially PCE, which just came out yesterday. And on top of that, we saw a big increase in spending for February so far. We actually saw new all-time highs in credit card debt. So there is a very good probability that we're going to continue to see this, especially because the jobs numbers that came out were still pretty good. They were not necessarily in line with what we wanted them to be. So, in my opinion, we're going to likely see a possible head and shoulders developing here on SPY. Am I promising it? No, but it's very possible. And you could see right here that we had like a left shoulder here. We had potential head developing here. Then we had the right shoulder that could end up developing before we do continue to come down. Now, as the market does end up panicking over the Fed continuing to tighten, we could see lots of investors capitulate, and it is very possible that the high CPI could spook the markets and we could actually start to retest October lows, meaning SPY could come back down to the 340s. It's very, very possible. I know a lot of people found it very hard to believe, but you have to remember that there wasn't really much backing up this rally from a fundamental basis. So yes, the market could come down like that, but the real question is, why would the market reverse all of a sudden and then get this squeeze to the upside, right? This would be the first squeeze for Tesla. And by the way, guys, I will talk about Tesla just near the end of the video. I'm just going to quickly talk about SPY first. Now, why would the market end up getting a squeeze later on? Well, the answer for that is because I believe the Fed is going to pause very soon on rate hikes. They're getting closer to it. I believe it's most likely going to be either in May or June, depending on the extent to which they raise rates in March. That really depends. I don't truly know. It also depends on inflation, but most likely in this period between May and the June meetings. We also have June 14th and then May 3rd are the two main meetings. During one of those, they're going to announce a pause, and this is likely going to cause the market to rally, in my opinion. We're going to see a lot of buyers step in. Please remember that back in 2008, when the market was essentially coming down, uh, the market was easier to read. I'm actually going to use the weekly chart for that. The market was a little bit easier to read back then because the level of manipulation was nowhere near the extent it was at right now. See how the market came down? It bounced a bit, came down a little bit more, bounced, and it just started crashing, bounced a little bit, then continued to crash. And then back in like 2001, right? This crash was a little bit harder to read. You could see we came down, we pushed up, we came down, we pushed up, we just came down and down. And the trend was very, very consistent, right? Well, what's happening in this market is two things, in my opinion, we can actually learn relative to the past. The market's way faster at pricing things in. And on top of that, the market is actually a lot more volatile. And there's a lot more manipulation affecting the way the market moves. So, what I'm trying to say is the market will likely, in my opinion, come all the way down by the time we get to like May. But then the market could get a really nice bounce, and we might see a very big short squeeze after that. This would be very good for the market makers. They might manipulate the market to cause this. And we're likely going to see the market just squeeze and start to see a big rally. And they're likely going to try to trick everyone into believing that the bottom is in. And we might actually see the market try to fill the gaps up here, which formed in the 420s, maybe try to get to about 430 a share. It's very possible. And I believe that's likely going to lead to some squeeze going into like the month of March. Now, the real question is, why on earth would the market end up tanking after that? I'm showing you guys two crashes, not just one. I believe that we're in kind of like a kangaroo style market where the market's just bouncing back and forth. You could use whatever analogy you want, but I think that's what the market's going to do. And I believe that the real effects of the rate hikes are yet to come. And I believe that this will lead to another earnings recession where we're going to see very weak earnings, and we're also going to see more pain for everyday Americans and recessionary fears. I'm saying that because a study conducted by Milton Friedman actually found that rate hikes and monetary policies that change have lagging effects, and they often actually end up playing out about 18 months after, maybe a little bit less than that, like 15 to 18 months. And that actually aligns with when the US could be entering a recession after the rate hike started, meaning that the Fed was actually starting to raise rates back in like, you know, 2022. They became more aggressive by mid 2022. I believe that by the time we get to Q3, there are going to be a lot of recessionary fears, and going into like Q3 into like the start of Q4, the market's going to see some panic because we're going to see lots of earnings slow down. We're going to start to see unemployment go up, and things are going to get crazy during that time. We're also going to see a limit in credit use because investors and everyday people do not have as much spending power as they had back in 2022. There's not as much stimulus now that's just coming out to help people. It's going to become a lot more difficult for them. For that reason, we're actually seeing, despite the high jobs numbers that came out, you have to remember that the majority of the jobs are part-time jobs because Americans are starting to get two jobs, or they're actually just trying very hard to make as much money as possible so that they can actually maintain similar lifestyles to keep up with the higher prices of living. And on top of that, I just want to note that when it comes to unemployment data, we're still in a situation where we have a lot of Americans that are looking for jobs, and we're also seeing a big shortage in labor. But the reason for that is there's a shortage of labor yet low unemployment rate because so many millions of Americans left the labor force participation rate, and the reason for that is because a lot of Americans passed away, and also because of the effects of the pandemic and the policies which came during that time frame. So what's going to happen now is unemployment is projected to start going up. In one of my classes, I did econometrics, and we and what I learned is we're able to use lots of interesting forecasting methods. And by using ARIMA and other things like that, I actually forecasted that unemployment would approach about 5% by 2024. The Fed actually projected it to be around 4.6% the last time they mentioned it. And we're all coming to very similar conclusions, 4.6 to 5%. And all of this is now suggesting that, look, right now, we're getting closer and closer and closer to these targets. When more people start losing jobs, when millions of Americans lose jobs, we're not going to see as much spending into the economy. Money velocity is going to slow down, thus affecting the US GDP. And when spending starts to drop, businesses are likely going to take big hits. We're not going to see as strong earnings, and the earnings recession is likely going to perpetuate. I also want to note that we're in a very interesting economic expansion right now. And this is actually just using the whole pandemic crash and recession that we temporarily entered as an exception, because that was very quick. We had a quick drop in the markets followed by a big recovery thanks to stimulus. And if we just ignore that like very short duration of time, we've been in a very, very long amount of economic expansion. Typically, in the past like 100 years, they last a maximum of about 40 quarters, and we're actually at like 38 quarters. So there's likely going to be a big contraction very, very soon, leading to a recession. Elon Musk even said the same thing. Now, remember that Tesla has a tendency of being affected by the overall market. Look at how Tesla looks compared to SPY, even compared to QQQ. I think it's going to be more similar to the NASDAQ and QQQ, but once again, you can see there's a very big connection here, all right? I will get into Tesla in a couple of minutes, but let me just elaborate on this. We're likely going to get the first crash because of high inflation, the Fed being more hawkish, and the market starting to panic. Remember back in June what happened when we had a really, really hot CPI report. SPY went from 410 all the way down to about 360, actually 358. And how long did that take? 10 days. Within 2 weeks, we dropped $50. That was a crazy drop. That was more than 10% in such a short period of time. So it's very possible. I know there are people out there that have their heads in la la land. They believe the market is just going to recover, go to all time highs from here. I don't really see that. Could we get a bounce for the super short term? Yes, I know I mentioned that earlier, but ultimately the trend looks more bearish and we are going to likely see a big drop. Then we're likely going to see a big bounce thanks to the Fed pause, which is likely going to be between May and June. That's going to likely lead to a rally, a short squeeze. And SPY is going to likely fill those gaps all the way up in the 420s. And I think the market's going to squeeze, including Tesla. Then I think once we find our top, and I don't know where the top is going to be, I'm just like, speculating at this point. I can't really promise that. But if we do peak around like 430 or so, or wherever, people are going to turn super bullish again. History is going to repeat itself. People are going to believe the market already bottomed, and then we're going to get hit with reality, and another crash is going to come. And I think this crash right here that comes, this is likely going to be maybe the final big crash, depending on other factors. I don't know for sure, but uh, I do believe that the current data is suggesting that, because the recession is likely going to be announced. The market's going to price everything in. But like I mentioned earlier in the video, this is not going to be like a 7-8 month crash where we just crash and crash and crash for such a long period of time. We've been pricing things in. Look at this. We've been pricing things in since 2022 started, right? A lot of the crashing already happened. So I think it's going to be pretty quick. The reason the market is just so volatile is because of the options chain, market makers, and etc. So I'm seeing another crash, but it's going to be a little bit quick. It may take, I don't know, a couple of months. And then this will likely bring us to new lows. I could see SPY getting to about 320 or so. Really depends on different factors. Then we're going to try to get a bounce. And I think the market is very forward looking. So it's going to price all this in very fast. And then the market's going to bounce. And as we approach 2024, they're going to try to push the market up near the end of the year for a Santa rally so that we get a positive year over year amount of growth for the S&P 500. You can see right here, we tend to actually rarely see multiple consecutive negative years for the S&P 500 during recessions. It tends to be just one main negative year. Even back in like 2008, right? There's so many different times this happened. There were a few times, at least more in the past, where we had many consecutive negative years. I think the market makers do not want that on their balance sheets, not the market makers, the hedge funds, and they're going to actually try to prop us up a bit. Then I think by the time 2024 starts, the market's going to be very choppy because earnings are still not going to be that good. And then the Fed, by this time they might even pivot. So we could even see the market pull back a little bit more to start off 2024, a little bit more again. But I don't think it's going to be as extreme as what we see this year. And I think that the market's going to be a little bit sideways, then it's going to start recovering and recovering and recovering and squeezing as we approach the middle of 2024. And then by the time we get to the second half, I think the market's going to explode and rip to the moon. I do think we're going to get closer to those all time highs. It's going to be very fast. Once again, the market is super forward looking. And I do think we could see something like this based off the current economic data. But once again, don't forget, there could be other wars that break out. There could be other factors. I'm not promising this. I'm just showing you what the data is likely suggesting. What does this tell us about Tesla? All right. I did use fib levels. And I want to note that a very important level, at least on the daily for Tesla, would be right about here. If we assume 101 is the low, I don't know for sure if that's true. It depends on so many factors, but Tesla's still doing pretty well. One important fib retracement zone is around this 0.618 retracement. I do think Tesla might actually retrace there over the next few months. And I know you don't want to hear that, but I do believe it's a possibility. Tesla has a lot of gaps. There's also, because of the fact that high inflation is likely going to dictate how the market moves. Once again, it also dictates how Tesla moves. And on top of that, we could see a contraction in the economy and more fears that shift sentiment, which does lead to more selling for not just Tesla, but for like Apple, for SPY, for QQQ, and also Tesla. So I think that Tesla is going to start filling a lot of these gaps. All right. I do believe. I'm not saying all of them. I don't really know how low it's going to go. I don't want to like call the bottom, but I do believe it's going to have another pullback. Remember, historically, 9 out of 10 gaps get filled. All right. And we have a ton of them on Tesla. What I'm seeing is this. Let me just try to adjust my chart so it's easier for me to forecast. What I believe is Tesla might get a bit of a pullback from this point. We might get one last bounce and then a pullback. Hold on. There we go. Sorry about that, guys. And then what I see happening is there's a chance she's going to bounce like this and start coming right back down with the market and then slowly downtrend. Now, I don't know how low she's going to go during this next big drop. That's like very difficult to predict. I'm very sorry, guys. I just can't predict it perfectly. It depends on so many factors. But we don't have a very big catalyst to cause Tesla to come down to $100. That is not actually there yet. What could happen is during some big like push up because of the whole uh, the investor day and etc. More shorts could try piling in. Let me try to make this a little bigger so it's easier to see. And then I think Tesla might try to go for this gap fill by the time we get to the May period. So Tesla might come all the way down like this into like the 140 level. I know it's unfortunate, but I do think that's possible thanks to shorts. And then the market might get a big bounce and Tesla could bounce off that and start pushing up like this. Tesla might see a squeeze and might just go and go and go and start trying to break these highs. It might just take off thanks to more good news, a new model, or etc. Let me just adjust this a little bit. And it might try to squeeze like to some crazy high levels going into like the month of August. It might try to go for that like 230 to 250, who knows? But what I think is after the big squeeze it gets, it might get another big pullback as we approach the second half of 2023, maybe into like Q3, because of the recession. The recession I was talking about on SPY, the recession I've been talking about because of the lagging effects of monetary policy changes. Uh, I also believe that the rate hikes, when the real effects come, it's going to be brutal and there's going to be a lot of panic about recession. The recession is here and the market's going to start pricing in a recession. The market's going to start panicking because of recessions and sentiment is actually going to shift. So that, in my opinion, I'm not promising this, but that makes me prepared just in case some really, really bad news like that comes out, a big shift in sentiment for another potential crash. And we might see Tesla come down pretty hard. A recession could actually even lead to Tesla missing on one of their earnings. I'm not promising it, but it is possible. And what I think is Tesla could end up coming down to fill a lot of these gaps. It could be strong enough to cause it, right? I don't know the future, like I said, but it is possible Tesla could take another big hit later during the year. But this is just another good buying opportunity. This zone right here, the like 140s, also like 100 flat, these are some very, very nice buying opportunities. And then after that, regardless of how low Tesla goes, I don't really care if it's 90, 100, 110. I don't really care because I'll be buying and buying and buying, not financial advice, because as we approach the end of the year, we might get that mini Santa rally to pump Tesla back to the 150s, the 160s or so. Then we could come down because of like earnings and etc. for a little bit of time, kind of chop around before we start to see a nice recovery as the months go on. And then Tesla's going to start pushing back to the 200s, get well above the 200s, hold around these levels. Then as we approach the summertime, continue to push the 200s, get back to the 300s, and maybe try to get closer to 400 by the time 2024 ends, and we get another crazy mother of all short squeezes, something crazy like that, right? And once again, this would just keep going on, turn really, really bullish for the year during a big recovery phase, and just continue popping. So I'm not worried about where this thing ends up going during this year. I just see this as a very good buying opportunity. And I believe right now it's very possible for the market to start recovering uh, well into like 2024, maybe a few months into it. And I do believe we're going to see two squeezes. That's just my opinion between now and the end of 2024, two main giant squeezes, right? The first one will likely be right here during the Fed pause. We're going to get a Fed pause rally, in my opinion. Then we're going to see a big drop thanks to not, it's not really the Fed pivot that's going to cause it. It's more like because of contraction in the economy, because of earnings and so many different factors, lots of fear and shifts in sentiments, leading to another big crash. I think that's very possible. Once again, I don't want to promise if it's going to break lows or not. I just don't know. I'm just really throwing these levels out there, but we could see something like this. We could see another big crash. Once again, nothing to worry about before another bounce, some sideways action to 2024, then a really, really nice recovery after that, going back to all time highs as we approach the later months of 2024. I think it's very possible. Why? Because remember, Tesla jumped, all right, even during this this current stage of the economy, during all of the fear out there because of how weak fundamentals were. Despite that, Tesla went from 100 to 217 in 1 month. This thing could double in 1 month. It could gain $100 in its share price in 1 month. Okay, so it's not crazy at all to believe this thing is going to break all-time highs in 2024 near the end of it. I think it could really do that. I think it's just going to keep going. I really believe Tesla has such a bright future, and I really believe that as time goes on, people are going to look back at these dips and see them as very good opportunities. Many people may even miss on these dips to buy. So I wanted to make this all as clear as possible, as simple as possible, and I just want to prepare you guys for some very big market moving events, from CPI to the Fed pause to the FOMC meetings to the recession, which is likely going to be announced later during this year, maybe closer to like Q3 and Q4, which could lead to another big drop. All right. But with that out of the way, I want to thank you all so much for listening. Please have an absolutely incredible rest of the day. Remain calm, cool, and collected. And I'll see you guys in the next one. Tesla to the moon, because the long term future is still incredibly bright. And peace out.